Hey there guys, my name is Marcus, and in this video I'm going to compare VOO with VTSAX. I'm someone who loves investing mainly to ETFs and funds, and I'm really excited to make this video. If you have your own opinion on VTSAX or VOO, write it down below in the comments. Also, I created a course on ETFs, on how we can make money, what are some good strategies. It's also linked down below in the description. So let me just show you the basics of what you need to know before you want to invest to VTSAX or VOO. So the first thing, the main important thing, let me show you, is that there aren't many differences, but there are some really important ones. So VOO is copying, let me show you, when I come right here. It tracks the performance of SP 500 index, but VTSAX tracks the performance on the total market index. What does it mean? It means, and listen to this, the difference between the total stock market index fund and SP 500 index fund is that the SP 500 index includes only large cap stocks. The total stock index includes small, mid, and large cap stocks. However, both indexes represents only US stocks. And you can see it in a difference of, oh, my camera went off right now, so I'm going to turn it on. You can see that in a difference of VOO and VTSAX and their holdings of the stocks. And of course, the expense ratio is higher on VTSAX, 0.04%, comparing to VOO has expense ratio of 0.03%. So you see that these two are different. And then you're going to have also with VTSAX, the one thing that you need to know is that you're going to have 3,000 minimum initial investment. Now let's look on some similarities. Vanguard funds both are similar performance, broad diversification, low expense ratio. Now we're going to see like the growth here of performance. And what are some like differences? Minimum initial investment. Classified that you have like $3,000 for VTSAX, classified as Admiral Fund, Exchange Traded Fund, VOO, different number of holdings. And we see it right here. VOO profile, Microsoft, these are Microsoft, Apple, Alphabet, Amazon. We can even compare it right here when we come to Vanguard Technology. Look at this, 28%. Apple, Microsoft Corporation, Amazon, we see it right here. Now, when I come here and write VTSAX holdings, and it's going to load out right now, market value, and we see the shares right here. Now we can even go to here, and we see right here the percent of assets. And when we're going to compare it with right here, so like Apple is 4.9 here, in VOO it's 6.20, Microsoft, but many of them are really similar. But as I mentioned, VOO is focusing on large cap stocks, and with the VTSAX you have covered everything, right? So they're both like good. I'm really curious what you think, and which you think is the best or which you don't want to invest to. Now for me, like I like ETFs more, only because I have in my country, after 1 year of investing to ETF or VOO, I wouldn't pay any taxes out of it if I hold it for 1 year and more, and that's pretty good for me. So that's something to think about, and that's something what I would recommend if you're from my country, but probably you're from the US, so it depends if you're using Vanguard or something else. So let's summarize this whole video to see the differences. Initial investment, you have on VTSAX $3,000. First thing. Second thing, on ETF, like on VOO, you have only large cap stocks, only because it's copying, let me show you, SP 500 index. And VTSAX copies total market index. And also you have the expense ratio of 0.3 on VOO and expense ratio of 0.04% on VTSAX. And this is pretty much it. Like, I don't know what else to share with you guys because these are the basics that you need to know. And VTSAX is just index fund and VOO is a ETF. So yeah, and when we come here to prices, even check that out. And we look on the last 5 years and let's see also VOO. Look at this on the growth. So if you would be investing to, let's say 2016, you would have price on a 115 with VTSAX and VOO 200 and 427. So you see right now that VOO is more expensive to buy. But like the most important thing is just like starting investing and go long run. My recommendation is definitely focus on how we can make more money. And this is what I do, that I don't try to speculate on the market. I'm a long-term investor and I learn how I can like increase my revenue from business and how I can more money. And then I'm just going to, it's just like much easier for me then to dominate things. But right now it's like, let's imagine what was the last year and how it's growing. This is fascinating. And I don't know when this is going to stop. Like, because people are losing jobs, society at collapse, yet everything goes smoothly. I really believe that's because like we are living more in an online world, not in a real life. And that's a big effect on technology companies. And that because of that they are winning, right? So because yes, like there is stuff which was happening in 2020, 2021, but people were at home, they were using the products, they were using the services, so those services grew. And my recommendation is definitely research the companies that are in ETFs, that if you're fine with that, or like just research it by yourself and believe what you believe. Because like, let's imagine that in 2020, why no one predicted that e-commerce is going to grow so much? When we saw what was happening, that things were starting to close down, that Shopify would grow and other companies, Pinterest. It's logical when you look on the past that it was happening, but right now, it's like the only thing I do is that I believe what I believe, and I research what I believe, and that's what I believe that you should do too. In the moment when you're not doing that, it's tricky. So thank you very much, guys, for watching. Again, if you can have any questions, ask me down in the comments. I'm really happy to help you, provide you some guidance and support. You know how it goes, you know how it is. And definitely check the course down below in the description and M1 Finance affiliate link. Have a great day, guys, and goodbye. See ya.